So I'm ready to introduce our special guest for today. Yuan is joining us. She has done a number of cases. She asked us for a case that was a non-traditional, hard McKinsey case. So that just should let you know from the very beginning what kind of courageous, wild person she is. I'm going to give her a chance in just a second to give her introduction and to share a little bit about her background, about how she got to where she is now and what she's currently in the process of prepping for. And then I will introduce the case.
Great. I think I'll just take over. Thank you, Jenny Ray. So I'm Yuan. I'm a second-year master's student at MIT. And I'm currently in the process of preparing for consulting interviews, mostly for summer internships, as I will be graduating one semester later than expected time frame. But yeah, I'm currently in the process of applying to summer internship positions for most MBB firms. And in terms of the like how many cases I've practiced through, I believe I've currently done like 40 cases-ish with both the case partners at MIT and also the case partners in the management consulting, and then with Lisa, which is who is my I would say like the consultant that I work with. Yeah, the reason why I want to volunteer for a live case walkthrough is because I really appreciate the chance to work with Jenny Ray and then hear back from her, especially for the feedback that she could give me in terms of the performance and the position currently I'm in, as to like how far I'm in the process and then how proficient or how good I am at casing, especially for McKinsey. I know like I've done a bunch of McKinsey cases, but I'm still not quite confident, especially for some non-traditional wild case. So that's why I ask a favor for introducing a non-traditional McKinsey-style case in our casing session. But I know this is like quite a challenge for me, but I'm really excited to, to go through the case with Jenny Ray. Yeah.
Awesome. So I am excited to introduce the case. The case today is it's based on a concept from another McKinsey case, but I actually rewrote it to fulfill Yuan's specific request. She wanted a hard McKinsey case that was a little bit wild. I also made it COVID relevant. So there's an element of this that is quite timely for right now. Many of you that are doing cases in the moment will have a blend between historical performance that's old and COVID performance that's new that you have to think about. Mm-hmm. And so some of the things that we'll need to think about inside the case are financial, but also operational, practical, and some of those other questions. I also hope that this case is really fun. The final thing that I want to say is the case's name is Margaritaville, and I am not in any way specifically affiliated with Margaritaville, the brand or the song. And so as I am doing the case, I just wanted to make sure that that's super clear. This is a semi-fictional case based on real and tangible events, but it is any public information or any relationship that I have with the firms. Mm-hmm. So Yuan, if you're ready, we'll get started.
Oh yeah.
Right. I'm also going to start my timer.
Yep. Great.
Yep. Go ahead.
I think one more thing that I want to point out, I don't know if it's because like there are many participants that is limiting the internet span, but I sometimes cannot hear you very well. Maybe in the case I would just ask a bunch of questions, maybe just due to the signal.
Exactly. So, well, that will be a part of the regular process for what we're potentially going to be going through. You can always ask me to clarify if you miss something that I say. Mm-hmm. Just make sure that if you do it, you kind of let me know what you did hear, not just asking me to repeat entirely.
Mm-hmm. Awesome.
Great. So as you guys know, I won't be sharing the case today, but I will be seeing it on my side. I will also be timing us, so that as we go through the case, you're gonna, at the end, Yuan, I'll give you a perspective on what the timeline is like. My focus today is to give you this case as though I'm a partner in a second round at McKinsey.
Mm-hmm. Gotcha.
Great, so let's get started.
Mm-hmm.
Welcome to Margaritaville. Here's the background of the case. We're sitting in Miami on vacation. Florida has taken a don't worry, be happy approach to COVID. And while there, you've enjoyed a few different unique restaurants: Cuban American fusion, chill Latin, and a fantastic Asian sushi place. It's been great to eat out with a sense of normalcy. Now you're looking to mix it up. The weather is post-thunderstorm mild, a perfect fall evening. You decide to mix it up by adding a new dimension to your dining repertoire and head over to one of Florida's finest establishments, Margaritaville. Amid the neon lights, you have an epiphany. What if you pitched the restaurant chain of Margaritaville dine-in restaurants as an acquisition to a friend who works for a mid-market private equity company? The restaurant sells three things: food, merchandise, and, of course, margaritas and other alcoholic beverages. There are 22 Margaritavilles, all currently in the southeastern United States. What would make this an interesting acquisition for a PE firm? And should you follow through with recommending it to your friend? Do you have any questions about the background?
Yes, I think one general question is, can you just briefly describe a little bit about the Margaritaville to me? Because I'm not so familiar with this concept.
Sure. It's a restaurant that serves sit-down food, so it would be kind of similar to a restaurant where you have, a waiter, an Outback Steakhouse, for example, and they have, of course, like I mentioned, margaritas as well. Lots of those on the menu. So a standard menu, sit-down themed restaurant.
Mm-hmm. Great. I think, I'll just go ahead and recap the case so that we're on the same page. So our client, I'm assuming that is Margaritaville, which is a restaurant, and currently it's considering having this or considering selling itself to the private equity firm. I think that the major confusion here is is our client the Margaritaville or the private equity firm?
We don't have a client. It's just you having dinner. And at the end of the day, the client would be the PE firm if you think that they would be of interest, but they might not even pay for it. This is just something that we're thinking about as kind of a fun strategic exercise.
Okay, great. So basically the Margaritaville currently operates in Miami, and then it offers where we have different types of restaurants around. And Margaritaville is currently thinking of selling their firm to a private equity firm. And then the business models or the operations mode is Margaritaville currently sells three products or services. First is food, and second is merchandise, and the third one is the Margaritaville related products. How do you can you describe a little bit about the Margarita?
Yeah, totally. It's just merchandise, right? T-shirts, cups, plaques and signs that are funny, that have silly signs on them. And so it's kind of like hokey folksy types of merchandise in the gift shop.
So Margaritaville is actually a singer or a people?
Yeah, it's there's actually a song. There's a song, "Wasting Away," again in Margaritaville, that it's based on from a theme, but it's a totally separate enterprise. It's just based on that theme of the song.
Okay.
However, if you go, it's guaranteed you will hear that song.
Okay, great. Awesome. Good to know, because I was like, oh, who is Margaritaville, or what is Margaritaville? And you mentioned some numbers here. Currently it has, the Margaritaville has 22 restaurants or operations in southeastern US.
Yeah. So 22 different restaurants, all the same theme.
Okay, good to know. And our target is to understand whether or not this is or how we should sell this business to a private equity firm, or what should we do, or is that correct?
That's right.
Okay, great.
Just what should we do? What should they do? Right? What would you're trying to maybe think about it just as a thought exercise and then connect the dots if you think it makes sense. Yeah. Ultimate strategic question is, would you make the call? Would you call a friend and say you should buy this company?
Great. Basically, is this firm worth investing?
Yep. Mm-hmm.
Okay, great. Awesome. So yeah, I think I've got all the questions and answered. Can I just have 1 minute or two to gather my thoughts?
Yeah, take your time.
Great. So in order to identify if this is an attractive business or worth investing business, I would want to have a look at three major buckets. The first one is the overall attractiveness of such margarita-based food restaurants, like how people are willing to, or how people are interested in such theme with this restaurant. And then second is basically the target, which is the restaurant itself. How, like, what is its financial status and how profitable it is performing in this current situation. And then the third one is definitely the clients, like the people that is willing to acquire this business, how experienced they are in acquiring this food, like the restaurants, and then do they have the culture that is compatible with Margarita, like, which is the target. So within the first bucket, I want to look at the first, like how attractive the market is based on the historical trend or growth of this luxury food restaurants in general. For example, how people are willing to purchase the food, how attractive it is among the customers, and then who are the major customers. We know that it has a theme, like a major theme, how people are feeling about this theme. And second is, we know it's operating mostly in the southeastern US. We might want to identify the potential opportunities in other locations as well. And then fourth, the third question would be like, do we have any competitions within this current area or the area with of future expansion? Do we have the competitors that have the similar theme, like restaurant chains that is similar to us? And that's basically what I want to consider in the market bucket. And then in the second bucket, which is the margarita restaurant itself, I want to look at the financial status of the company to see how much of a profit it is making in terms of, from considering the different revenue streams that we talked about in the introduction. basically how much money we make from the food itself, or how much money we make from the merchandises and other associated products. And then what is the cost structure of this giant food restaurant chains. From the third bucket, which is a client, as I mentioned a little bit previously, does our client, the potential client who wants to purchase this company, has experience in running a food, like a restaurant with specific theme? Does it have a culture that is compatible with the Marina culture? And with its own operations, like is there any synergy that we can achieve if the company is acquired? Yeah, that's basically the three major buckets that I want to discuss. If you don't have any preference, I might want to look at the first bucket, which is the market. If we have more information about how welcome people feel about this specific theme restaurants in the southeastern US.
I do have a preference, but more than anything, what I want to know right now is what you think. Is this going to be a yes or a no? Are you going to make the call or not?
I mean, how like people feel about this restaurant theme.
So would you recommend, like, will you make the call to your friend who works for the private equity firm and say, you guys should think about buying this? Do you think it would be a good investment, or do you think it would not be a good investment?
Yeah, I think based on my like thoughts, I would say that this is probably an attractive business, given that this restaurant has a specialty, like it has a theme related to Marina, which is a song which is really special, and it's different from the other restaurants, like a luxury restaurants that probably don't have any specific merchandise products or specific affiliation with other songs or themes. So that might be like a potential interest to a lot of people who listen to the song and who's been a fan of the song or something like that.
So is that a yes or a no?
Yeah, I would say it's yes.
Okay. Just double checking. Okay. Awesome. So you said that you want to look at the attractiveness of the business. I actually have maybe one deeper dive question that I want to look at first before we go into some of that information. Specifically, in light of COVID and general restaurant industry dynamics, I don't know where you're sitting right now, but my guess is that one of the first questions that a PE firm would ask you is, why a restaurant? Why now? What would you say to that?
Yes, that's a good question. If we're sitting in the situation of a COVID, I believe that I've sort of previously discussed, like, why the restaurants, right? So this restaurant has a specific theme and it has the specific target customers, and that can be expanded in the future. So that's sort of the reason why I would like to, or this restaurant has a high potential to be acquired, or has a high attractiveness to the client. However, in terms of the actual timing of the acquisition, I would say currently COVID has imposed a huge stress or burden on the restaurants or other retail services. And a lot of people restaurants just closed down due to the COVID situation. So it might be a difficult time for this restaurant to like dig into a normal operation mode. However, we can definitely come up with some strategies in light of the COVID situation. We know there's a lot of different types of services that restaurants are currently offering to the customers, not just limited to the food itself. And we just noticed that a lot of restaurants are opening up like for takeout food or for other services. And especially for this specific margarita firm, we are not only offering the food, but also the merchandises and other associated products. So I would say that this restaurants wouldn't be a traditional restaurants. And then we can definitely develop some strategies to provide different level of services in light of COVID that is attractive to the customers.
So let me ask just one more time. Why this restaurant? Why now? Can you just summarize what you think?
Yes. I think the reason why I would recommend, my hypothesis, I would recommend that our clients should purchase this company is because the margarita firm, the margarita restaurant has a special theme that is really attractive to the customers. So we have a large customer base. And then why now is because even if we are facing the COVID situation, we can definitely develop some strategies that provide not only the food services, but also the different types of services like the merchandise that we mentioned and other related, like margarita related products to the clients or to the customers so that they are still going to be attracted to the restaurant itself.
Okay, awesome. Well, right now I've got revenues on a per store basis and I want to estimate it as we're sitting here about to order our drinks and our food. So I've got some data for you and let me know if this is sufficient for you to calculate the revenue.
Great.
First of all, the average cost of a menu item is $18 and the average cost of a drink for those who order one is $12. The two main items are signature margarita glasses and t-shirts in the merchandise store. The average price for those who buy those is $20. The capacity of this restaurant that we're sitting in is 200 people. The average turn time per table is 1 hour. The restaurant is open for operations 7 days a week from 11 a.m. until 11 p.m. and is open 350 days a year. Can you calculate the revenue per year of one store for Margaritaville?
Great. So since you've described a lot of data to me, I would just recap all the data so that we're on the same page. So average cost or average price for each item on their menu is $18 and then the drink is $12. And I would assume that's the average purchase of the people. Is that correct?
Exactly. So $18 for the menu item, 12 is the average cost of a drink, but just for those who order them.
So that's for the, okay. Great. And then the average purchase for merchandise is $20.
Yes. Again, for those who buy them.
Great. So the restaurant has a capacity of 200 people at a time, and then the turnaround time is 1 hour. I'm assuming that's each group of people would stay in a restaurant on average for an hour, and then they will leave, and then the next group of people would come in.
Correct.
And the operating hours is 7 days within a week and 11 a.m. to 11 p.m. And then the restaurant operates for 350 days. So you want me to calculate the revenue, the annual revenue for this specific restaurant.
Correct.
And then I noticed that when I was recapping the case, the numbers, you stressed the point that the costs per menu item and per drink, and then the merchandise is actually describing the average cost for those who bought them. So I'm actually curious, like, do we have the number or the percentage of the customers who actually order the drink or order the merchandise?
We do. Yeah, 10% of the patrons purchase merchandise and 25% have a drink.
Okay, great. And then for the menu, for the products or the orders on the main menu, we're assuming that every single people would order
Correct.
$18.
Yes,
okay.
Everybody would order, or if some ordered an appetizer, but some ordered 3 things, the average food per person would be.
Yes, and we also described the capacity, but the actual rate, like how many people are present in the restaurant might be different from the capacity. Do we have the specific information on like how the different capacity, or what is the present rate for of the customers from 11 a.m. to 11 p.m. in those 7 days?
Absolutely. So yeah, there are some times when we're not as busy. Other times we have a line out the door. Our average utilization on the balance of the year is 80% on average.
80%. Okay.
80.
Okay. Great. So I think I've got all the information I would like to know to proceed to the revenue calculation. Yeah, can I just have maybe a few seconds to lay out my structure a bit?
Sure, just make sure you come back and walk me through your math.
Yes, great.
All right, you ready?
Yes, I'm ready. So since we're going to calculate the annual revenue from for this company, what I want to do is I will first proceed to calculate the daily revenue, and I multiply the number of like 350 days in a year. So in order to calculate the daily revenue, I would like to break down the revenue into three categories. The first one is the revenue that we receive from the main, like the food from in the main menu, and then second is the drink, and then third is the merchandise. So accordingly, I will also calculate the volume of consumptions in each category, and I'm sorry, and I multiply the volumes by the price to get the total revenue for each category. Yeah, so now I will proceed to calculate each term yeah, within this revenue list. So for the food, we're seeing that average price for the food is $18, and within the day, the occupancy rate is 80%, and then capacity is 200, which means on average, we have 160 people coming into the room, coming into the place, and then we run 12 hours within a day. So that gives us a total of people coming into our restaurants to for food ordering. So this gives us 160 multiplied by 12. This gives us roughly 1,920 people coming into our restaurant. And then for each people, on average, they pay $18 for food. So I'll be able to calculate the revenue we receive from the food. That's going to give us roughly 34.6K. That's the revenue we receive from the food on a daily basis. And then we basically do the same thing to drink and then to the merchandise. So we know that 1 quarter of the people would actually order the drink. So that's going to give us 1920 multiplied by 1 quarter, 1/4. Which is 480 people would actually order the drink. And then each drink costs $12. Which gives us a total revenue roughly equal to 5.76K. And then for merchandise, we know only 10% purchase the merchandise. So gives us the 192 people in a day that is purchasing merchandise. And then each merchandise costs $20. That would give us roughly 3.84K. So I will add the three numbers that I calculate from food, drink, and merchandise together to get the total revenue that we receive daily. Do you mind if I do some roundup?
Yeah, get me close.
Okay. I would say the total revenue for the daily basis would be 44.2K. And then if we multiply by 350 days, I just round up to 44. 44 multiplied by 350. That's going to give us around that's going to give us in total of $15.4 million on a yearly basis for the revenue. Yeah. So yeah,
what do you think about that?
Yeah. So I think it's really hard to comment on like the exact revenue without considering the cost of this operations of business. So I would say currently it seems okay to me, but as I don't have I don't have a specific knowledge about what is the annual revenue that one restaurant should gain, but I would suggest that we look into the cost structure to see how much profit that this company is currently making.
Awesome. So I think we should. Let's look about costs. I've got some for you. You ready?
Mm-hmm. Yes.
Good. So our variable costs, the food and merch costs, are 30% of revenues. For staff, we have 10 bartenders, 10 cooks, 40 wait staff, and a manager. Each member of the staff has 7-hour shifts. They either work from 10 to 5 or from 5 to 12. The staff costs per location are $3.5 million a year. Additional costs, including marketing, insurance, and facilities costs, are $650,000 a year. So what are our, what's our annual profit?
Great. So I actually lost the connection a bit. So I couldn't catch most of the numbers. So I know that the variable cost for food is on average 30%. So I would assume that includes the variable cost for food, for drink, and for merchandise, if that's correct.
Yep.
And then for the labor costs, I cannot quite recall like how many people do we have currently within the restaurant.
10 bartenders, 10 cooks, 40 wait staff, and a manager.
And a manager. Okay.
As well as a manager.
Okay. So that's going to give us, 60 like workers and then one manager in total. Okay. And then on average, I'm assuming that the manager and then the workers have the same working hours, which is 7 hours of work, and then they have the rotation from 10 to 5 and then 5 to 12.
Yep.
Okay. And you mentioned there's some relocation costs, which is $3.5 million. What, if I understand correctly, what's that for?
Yeah, that's the staff costs.
Staff costs. So that staff cost is different from the labor cost that we just mentioned, or it's the same?
I didn't mention labor costs. That is the labor costs.
Okay, that's the labor cost. Okay. And then there's costs associated with marketing, administration, or operations, but I missed that number. Can you
Great.
repeat the number?
650,000.
Sorry, 650,000.
Yes, 650.
650,000. Okay, great. So yeah, I think with this number, with this information, I should be able to calculate the profit. So that's marketing cost is actually annual cost, annual fixed cost.
That's right.
Okay. So
walk me through this part of the process.
Yes. So for the variable cost, which is 30% of, I'm assuming that's 30% of the revenue. And then the revenue I just calculated is 15.4 million. So the total revenue cost would be 30% of that number, which is going to give us roughly 4.62 million as the variable cost. And then for the staffing cost, we have the number, which is 3.5 million. And then for the marketing, we have 0.65 million. So if we add these three numbers together, we should be able to get the total cost, which is around 8.8 million. And then we know the revenue is 15.4 and then the cost is 8.8. That gives us the profit of 6.6 million. And then also we are making a profit margin of, roughly, I would say 40%. So I would say like a profit margin of 40% is actually a big deal for a food or restaurant services. And I would say just by looking at the profit margin, I would say this is a really promising business that we should probably go for. But there's definitely also some other considerations that we need to take into account. As you mentioned, currently we're in this in the COVID situation, and I believe that the business model or the business structure would probably need to be changed, and the consumption rate or the type of services that we are able to provide might change as well. So these are all the factors that we need to consider aside from just the profit margin number.
Good. Okay. So now we want to get a valuation so we can pitch how much capital the company would need. How would we value it?
So yeah, can I just maybe take a few seconds to think about it?
Mm-hmm. Go ahead and tell me what you're thinking about here.
Yeah, sure. So I think since we're considering the acquisition in the special time of COVID, I think normally we would just say consider the evaluation based on the previous revenue or previous profit, and then to evaluate how promising or how profitable that this business can bring us to. But since we're considering this acquisition and currently, I think it is important to see what is the projected revenue we're able to earn after or during this COVID period, and then how much change that we're going to make so that the company or the restaurants should be adapting itself to this new situation. Specifically, we want to look at what are or how flexible this restaurant that is able to adapt to this situation, and what other products or services that they're going to offer to the customers, in addition to just the food or their traditional services. And we also want to look at the customer response. Basically, are people willing to still go outside and then consume or go to the restaurants to experience this luxury experience in person, or they want to stay at home and then do whatever they want to, like without going to this luxury like restaurants. So that's more towards the marketing. And yeah, so I think the three major categories that I want to look into is definitely what is the projected financial conditions that are this that the margarita restaurant chain is able to make in the future, and then what is the market, like the customer's response in the COVID situation. And then the third one is what type of new services or products that this company is able to carry out in this situation in light of the changes in consumer behaviors and then change of other preferences.
So Yuan, we did a valuation. We think it's about 1.2 billion. How is the owner, the private equity firm, how would they make money back? How would they make a return on their investment?
1.2 billion, sorry.
Yep.
Is that 1.2 billion? Okay. So that's 1.2 billion is for the total 22 firms?
Yes.
22 restaurants. Okay, that makes sense to me now. So assuming that we all the 22 restaurants have the same like structure and an expected profit or revenue, we're seeing that. Do
you remember the question?
Yes, like how should our clients or the private equity firm actually make money?
Make a return. Yeah, how do they get return back for what they spend? Mm-hmm.
Yeah, that's a good question. So I just calculated that the profit that each firm or each restaurant is making is $6.6 million. And if we multiply by 22, we get the total profit for all these 22 chains, right? And I was just considering or estimating the net profit that we're able to gain from these 22 firms. But it seems that this is there's still, like, even with 22 restaurants, there are still a big gap between the amount of money that we invest and then the amount of profit that we're able to gain in the next few years. So yeah, I would say, so the total profit for these 22 firms are, around $130 million. And then the investment is $1.2 billion. So if we want to have a return on the investment, that would actually take us like it's actually like 9 years or 8 years to have the return on the investment, which is quite long. So the question is, I'm assuming that how should we make this period shorter, less than 8 years, if I understand correctly?
Yeah. But more importantly, just understanding that a private equity firm usually has a 5 or sometimes under year timeline. How do they generate a return so that their valuation is going to be higher at sale?
That's a good question. Because I'm not so familiar with like how this private equity firm actually works. Like, they want to purchase the firm and then sell it within 5 years, if I understand correctly. Like
5 is usually a target. They want to sell it when they can sell it for more. If it's 1 year, they'll sell it for more in a year. If it's 5, they'll sell it for more then.
Yeah. Yeah. So currently, Yeah, some strategies.
How do you make it more valuable?
I would say to evaluate the profitability of a business, we can look into several major buckets. The first one is how attractive or how many or how much or how big is the customer base that this business can attract. For example, how people are attracted to this to this restaurant with this specific theme. So basically, if we want to expand its customer base, then we can potentially have more chain stores in other locations other than southeastern US, so that we can have a larger impact across the nation. And then second is about the products and the services that we offer. Currently, we are offering the food and the merchandise and other marina theme related products. So I was wondering if we can have our restaurants launch different sorts of products. For example, organizing live events like with music, songs, like invite singers to play live events, so that people with like who are the fans of this song could actually enjoy more music related themes at this specific place. And then the third one is actually to increase its profitability from the financial standpoint. So for example, if we would want to have a higher profit margin by increasing the product or the price of the products and the services that we offer, and then reducing the costs at some point, then the total profit margin that we're going to make is going to increase, which would further attract which would further increase the evaluation of this target firm.
Great. You know what? We're almost out of time, and the CEO of the PE firm, your friend, just called you. So you decided to just let him know what you're thinking either way. What do you think? Should you tell them about the deal, or should you just tell them where you're sitting and that you're having a good margarita? Which way are you going to go, and why?
Great. I would recommend that our client or my friend actually purchase or acquire this margarita chain restaurants for the following reasons. First is based on the financial analysis, we're seeing that the firm or the margarita restaurant is making on average 40% of the profit margin, which is a really promising number in the restaurant chains. And the second reason is because the margarita restaurant is not only a traditional restaurant that only offers food services, but also it has a specific theme that is attractive to a specific group of customers. That said, this restaurant itself has a specialty in it, and it's different from the other restaurants, like other luxury restaurants that we're aware of. And the third one is, even if with this current COVID situation that have created a lot of burden on retail services or the restaurant services, I believe that if we are able to launch different products and launch different services to remote consumers, we're able to maintain this profit margin around 40%, which is really promising. And at the same time, we can design different strategies to encounter the COVID situation. So, however, we do have to consider some risks. For example, the COVID situation is definitely a risk. Like the level of flexibility that the company is able to adapt to this situation would be the key issue in our consideration. And the level of services that we're going to offer and the changes that we are going to make in this organization is definitely the key consideration. For the future, I would suggest that if our client or if my friend wants to pursue the acquisition, then I would suggests that he look into the possible changes in consumer behaviors in a COVID situation. For example, if no people want to go dine out in the luxury restaurants anymore, or they still want to do that, and some of the products and services that that our friend can design for this margarita restaurants to encounter this COVID situation.
Amazing. Okay, Yuan, thank you so much. You can relax. How was that? Was that what you wanted? Was that hard enough? And was it interesting enough?
That was interesting in that I was not totally sure about, what the restaurant's for, or actually margarita, what is that? So I was a little bit stuck at first, like, I don't know what's that for, and then I don't know how it is related to the case. Yeah.
Absolutely. And when you go home after the case, you should definitely look up Margaritaville. You'll see it. And I don't know how many people on the call, if you guys want to just throw up your hands, have ever been to a Margaritaville. The last time I went to one was like maybe 15 years ago. So as you can tell, I was feeling a little spicy this morning when I was writing this case, making it super fun. So So Yuan, I want to give you some feedback, but I thought that from a mechanics standpoint, you are so strong. So I actually pushed you into the nuance pretty quickly inside the case. And if I had to bifurcate the performance, I would say strong mechanics, nuance missing. And I really want to talk about how to add that nuance. I also just have some tactical pieces that I think could be really helpful. You asked at the beginning, in our pre-call conversation, you want to be a little faster. You want to make sure that you're moving through things quickly. And I have 2 ideas for how you can do that. So I just want to go through the case and give you some of that feedback. And then you can ask me afterwards if there's anything in particular you want me to elaborate on a little bit more.
Great.
So first of all, in your opening, you took 5.5 minutes to open the case. And I think part of that was that you didn't want to ask, but you did want to ask, like, what is Margaritaville, right? And so here's the way that you ask a question like that. You mentioned that it's a restaurant. When I think of restaurants, there's a couple of different kinds, right? There's fast food, there's fast casual, and then there's full service dine-in. And I'm thinking that this is, and just pick one, even if it's the wrong one. But I want you to kind of right away try to get to the point at the beginning of the case. Sometimes you guys are going to know exactly what it is. And some of you were like, Margaritaville, got it. And some of you were probably like, no idea what she's talking about. And so depending on the case situation, that's going to be you. So just, right away ask that question. However, the other thing that you did is that you started asking me questions before you recapped for me. And I felt like that didn't get you into the flow enough where you could just tell me what you heard and give yourself a little bit more time. So just reorder that, right? Recap first, even when you've got this big looming fat question, and then come back to me afterwards and ask me all the questions. Okay. So that timing needs to be a max of 4 minutes. And that 5.5 minutes just started eating into your time right there at the beginning of the case. Made me uncertain about you and made me feel like I wasn't sure what was going to happen next. And your structuring, you nailed it. 2 minutes to build the structure. I thought your structure was really good. I think we could make it from a B+ to an A with just 2 small tweaks. Number one, I think your first category was too large. You had overall attractiveness in that category. I kind of regrouped it into like demographics and competition. I honestly think that competition for restaurants is kind of a weird thing because it's a very, very highly fragmented market. Competition also includes at-home cooking and a lot of other things. And so I didn't love that section. If I was going to eliminate one piece of it entirely, I would have done that. So I think you could have presented me less, first of all, or presented that in a bigger chunk at the beginning, or sorry, smaller chunks from the bigger chunk at the beginning. The second thing is that I felt like you lost your communication of the structure after beginning. And so in a virtual environment, I need an incredible amount of detail where you're saying, like, in the first category, I have 3 things that I want to look at. The first thing is, the second thing is, the third thing is. And so you just kind of started listing out and explaining, and I wasn't sure where the list was starting and the explanation was beginning. And so it came across, even though at the beginning you told me you had 3 categories, I didn't even know when we were moving from category to category. And that took you 5.5 minutes. That should be 2. So I need a much more direct communication of your structure right at the very beginning, especially for McKinsey. Okay. So those were two places right at the beginning that I felt like, gosh, we could have gotten 4 to 5 minutes back, and also given a stronger impression right at the very beginning. Okay, then the first question I asked you was a creative question. That is your weakest part of the case. Those are the places where you need to practice. Thinking on your feet and talking through the thinking on your feet. So what you did is you kind of rambled for a while, barely came back and structured, and then I had to ask you, actually in both situations, that one and the one at the end of the case, like, okay, what are we, what is even on your paper right now? What's happening at the moment? And so I really, really wanted a lot more clarity from you. So the question that I asked you at the beginning was, why this restaurant? Why now? And you and I get it that that's not an immediate, easy question to ask, but what I'm asking for is, I'm looking for your strong gut instinct, right? And that was why I asked you at the end of the structure, yes or no, which way did we go? And by the way, in a yes or no case, in a market entry case, profit scenarios case, or an M&A case, you always would want to have that ready to go and state that at the beginning. But yeah, I think that part and the last part, my recommendation for those would just be, start out by categorizing what you would think about, and then go back and fill out your categories and write while you're talking. So give yourself the pause of the time when you're writing to collect your thoughts a little bit, because you came up with good ideas. You said special theme and timing at the beginning. In the end, I actually wasn't sure exactly when we were moving on from one thing to another, but it was increased profitability, open new stores. There were you kind of got to where I was wanting you to go, but it again wasn't just communicated super clearly. So I would go through reps on those creative questions. Just have somebody ask you, hey, what's your gut feel? Why should we do this? What are 3 things we should be thinking about? Really pushing you, and do an hour of those kind of questions. And I think you'll break through that really quickly, because the substance of what you came to was fine. It was just the process lost again a little bit of confidence.
Yeah, I think in the beginning, I missed the part that you want to consider acquiring this business at this moment. So that's why I said yes, but later on you said at this moment. I was like, no, if this at this moment, I probably should say no, but
no, I like the yes. Actually, most M&A cases bias yes. So if you're ever not sure, just pick yes. It's a great way to start. So that wasn't a bad choice. It was more that what I was pushing you for there and throughout the case was just more clarity, right? Yes, no. Yeah. I was looking for that kind of I know you have a gut feeling here, and I don't want to go through all of the mechanics of the math and everything else. Speaking of math, wow, well done. You were flawless in terms of your calculations, and you gathered all the data. You caught everything that I was trying to hide away from you. And so I thought the math was really a strong suit. You do have a speed thing, though, when you're collecting the data. So when you're doing the math, there were 1 or 2 shortcuts that you could have taken to make them a little bit simpler. Anytime you're repeating, multiplying 3 things by something, just add those things up in the beginning, or weight them by whatever you need to weight them by, and then get those calculations summed together. But that for me wouldn't have made the difference. But if you at the beginning had just kind of gotten to the point a little bit more quickly, and also I'll just give you one emphasis point here. Give me an interpretation as you're repeating the data. So for example, I told you after you asked, right, 10% of people purchase an item of merchandise. Tell me whether you think that's low or high, right? Immediately, this data is going to give you the opportunity for the next thing, increasing the chance for the future. So one of the options is get more people to buy merch, right? Get more people to buy drinks, get more people to buy multiple drinks. And so I have a very long idea list of the ways that they could drive some of that kind of behavior. And the data at the beginning gives you that. So if you can make the connection between the data and the insight before you even start the math, that's kind of an A candidate tactic there. Throughout the math, though, again, I really felt like you were in control and understood it, thought the profit was good, gave me good reasoning. The final thing on the math is just, I felt like your insights could have gone a little bit deeper. This looks amazing. You even mentioned, I feel like that profit is really good. It is. It's great for restaurants. There were a lot of things that I felt like you kind of did, but could have just gone a little bit deeper on in terms of the insight. We already talked a little bit about the second creative question. And then your last, the closing of the case was about 2 minutes and 40 seconds, too long. at the end of the case. And here's where I felt like the nuance was missing the most, right? It was your friend calling. I think you could have been structured but shorter and made it a little bit more informal. And that was like a complete, like, this is the CEO situation. And I was actually intentionally in the case looking to break you out of that and try to see in a more natural sense how you would communicate. So the risks and the other things at the end, like, they are nice to have, but in this case, I probably would have truncated those. Okay, what questions do you have for me?
I think, so initially you prompted me to draw my hypothesis on my intuition, whether or not I would suggest my friend to acquire. But what if, like, in the end, initially I thought it was yes or it was no. Like, at the end, I just realized it's no. So does it matter, like, if I just turn around
change your mind?
Answer? Yeah.
No, but you'll need to just defend it, right? There's 3 parts of the end. It's the recap and the recommendation as well as the next step. So your recap and your recommendation need to fit together. You can't be like, we found out that it was great profits and there was a lot of upside, and then I say no, right? Like, like that would really come out of left field. So you would need to explain it. I think there's part of why I make cases like this is I do think there's an interesting case for this being a no. You know, one of the things that you'll find that's actually a nuance about Margaritaville that you may or may not know is that it's a very tourist-centric kind of, you know, it's at Universal Studios and on Miami Beach and, like, in places that are very heavily tourist affiliated. They don't count a lot of repeat business. Yeah. Right now, tourism is really slammed, in COVID. What does that mean? Yeah. So, you know, I would just want you to justify whatever you said. And the stronger you are, the more I'll push back on you. So if you had been a little stronger throughout the case, I would have pushed back even more to really understand why you thought about what you were thinking. I backed off a little bit because I didn't want to throw you into too much of a tailspin. And when you feel the interviewer doing that, you know that you actually need to ramp up your clarity, ramp up the directness.
Yeah, correct. Yeah, I think because while I was doing the case, and as soon as you pointed out that you want to do this, or my friend wants to do this business at this current time, then all of a sudden I feel like probably I should say no. And then even at the very end of the case, I was like, yeah, even if we have this good profit margin and historical, like, good numbers, I still wouldn't say that I would recommend my friends to acquire this business. Because it's too risky, and especially it's my friend, then I probably don't do that. But I was a little bit hesitant, like, speaking out my guts. Yeah.
Well, I actually, I think it's a great business. I really like it. I'm not a big restaurant fan, but when I was doing some of the research for the case, restaurants get about a 10x multiple. I actually haircut it because of COVID to an 8x multiple. You know, money is really cheap right now. And one of the big strategies here would be opening more stores. So if you can get that, you know, $6.5 million per store and just open 10 more stores, your valuation, it goes up 1.5 times, right? What does it cost you to open a store? I don't know. That would be another part of the valuation that you need to think about. If you can drive more merch, if you can do, there was, by the way, I don't know if you were watching it, but there was a flurry of interest that was coming in through the chat bar of people that were coming up with cool ideas. One of them was like, why don't you sell Margaritaville stuff inside grocery stores, right? Give people a sense of, like, the beach at home. And there were a lot of really cool ideas that I think are actually upside opportunities for an organization. That, you know, what they do is, right, they take cheap money and they do something, they take the leverage out, they take the money, and then they pour it into the growth of the business. And in a situation like this, opening new stores could be great. Opening new stores where other restaurants may have closed because of COVID challenges could also be great. There are some opportunities, but again, you can say yes or no. I just think there were some things to talk about there. The final thing that I just want to say is I did actually have a valuation number for you if you had said that. So I had an EBITDA multiple if you said that you wanted to do a multiples valuation, which you should always ask for inside cases because it's a very simple multiplication. You just take the number that you already had and then you multiply it times the multiple that I give you. And so that multiple in this case was 8, which is how I got that $1.2 billion number. I also had a cash flow discount rate model for this, and my rate of the discount rate was 10%, and the growth rate was 2%. So the net of that was 0.08. And so you would have had to divide the cash flow, or what we proxied as the EBITDA, by 0.08, which gives you 1.1 billion as the estimate. And so I was actually in that situation looking for something a little bit more tactical, but just in case people that are listening or watching, if you wanted that information inside the case, that was what I included.
Great.
All right, so let me, do you have any other questions? Otherwise, I'll open it up to the rest of the audience.
I think just one last question. In terms of like delivering a clearer structure or a structured answer, what suggestions would you, what suggestions would you have for me?
Structured
like,
at the beginning or structured at the end?
I would say like structure in the creative question.
Oh, yeah. So for the first one, the first question was just like, why a Margaritaville? Why now? Right. And so what I would start with is I said yes. So I'm going to go off of that and say, what makes this yes now? And that's what we're going to test for inside the case. And then I would have gone specifically into, right, what kind of locations are we in, maybe, but it would have just been the first three things out of my brain, right? When I think about what's being hampered for, can we do takeout? What is our utilization now? What kind of locations are we in, and are tourists there? Are people still going to restaurants? Do we have to reduce our capacity? Like, there are a lot of questions I think you could have asked, but the way that I just asked them isn't how I want you to ask them. What I'd want you to do is come up with one, write it down, right? Think about it. Okay, come up with a two, write it down, and then recap for me however many you come up with. Usually 3 is the target or something like that. And then in the end, same thing, right? Okay, so how do we make a return? Gosh, I've never thought about that before, but if I were an investor, how do I make a return? I create more value for the company, okay, which means more profit. So let's just talk through how we would make more profit for the company. First, right, you went for top line, great. So here's how I would grow the revenues of the company. And then here's how I would grow the cost of the company. And then there's kind of another piece, which is just like same store openings, right? So opening new stores and new places. But yeah, just the same thing, right? Write down one thing, think about it for a second, and then go on to the next thing so that it appears a little bit more organized and controlled. Okay,
sounds good. Yeah, I think these are all the questions I have. I really appreciate this time, like your time and attention. Yeah.
So you're more than welcome to stay, but I know that people might have questions either about the case or about my feedback or about your performance. But the last thing that I just want to say is thank you so much. I really enjoyed that. I think that with a couple of these tweaks, like I mentioned, I thought your process was super solid. You remained controlled and optimistic throughout the case and seemed like you were having fun solving it. All of those things are a really big deal to me as an interviewer. And so just keep that enthusiasm as you are working on refining your final process steps.
Great, thank you.
Good luck.